knowledge sharing webinar organized by Meta and Meta. Thanks all for your participation. Friends, Meta and Meta is proud and delighted to start the webinar series on Security Exchange Board of India, Issue of Capital and Disclosure Requirements Regulation 2018. We generally short form says ICDR. So friends, this is a most important topic, and it was realized that we have not done on this topic where through which the funds are raised by the company, corporate. Very important event for any company to raise the funds. And I must say it was Kinjal's idea only that why we are not having this series, and she initiated, and we are doing this entire series, and we are excited to do that. And today's we have already shared that what all topic we are taking. Today we are taking IPO main board part 1. Next week IPO on main board part 2. After that, on 2nd May, right issue. On 9th May, further public offer. On 23rd May, QIP. On 16th May, preferential issue. On 13th May, SME IPO. So it is 13th May IPO by SME and migration to main board. Friend, entire gamut of fundraising activity or by corporate is covered in this webinar series. I wish all maximum participants take the advantage of this webinar. And we have with us experienced panelists as always. And we have with us today Mr. Nakul Patil, CS and Company Head Secretarial and Legal, KSH International Limited. Welcome, Mr. Nakul. Thanks for your time.
Good morning. Thank you.
To formally introduce Mr. Nakul Patil is a qualified Company Secretary and a member of ICSI. He has a bachelor's degree in computer applications from Dr. BAM University, Sambhajinagar. He has over 17 plus years of oral experience in general insurance, leading IPO, investor relations, secretarial, FII, FPI compliances in overseas jurisdiction, compliance, legal, M&A and finance function. Oh, wow, varied experience. We are proud to have you as a panelist.
Thank you, ma'am.
Mr. Nakul Patil has worked with some of the industry pioneers like ICICI Lombard General Insurance, Endurance Technologies Limited, Force Pop Motors Group, Bellrise Industries, Carago Group Italy, and is currently CS and Company Head Secretarial and Legal at KSH International Limited, Pune. Mr. Nakul Patil has held the office of Vice Chairman of Chhatrapati Sambhajinagar chapter of WRC of ICICI in 2023. Some of the notable credentials of his career comprises assistance of the IPO of Endurance Technology, issue of listed NCD of Bellrise Industries, its rebranding and due diligence for IPO in leading the main board IPO of Karato India and KSH Intelligence. Setting and leading investor relations functions at this organization. It's very varied experience, Mr. Nakul. Thanks a lot for your time.
Thank you, ma'am. Thank you for having me here.
Our today's presenter is Kinjal Mehta. She is a chartered accountant and company secretary. She previously gained experience in EY assurance, auditing prominent private sector banks, and contributed to M&A transaction. Within EY's strategy and transaction advisory teams, he also worked with Black Soil Capital, a venture debt fund, underwriting investments in growth companies. Currently, she serves as a senior associate in Meta and Meta's IPO team. We have our moderator, Mr. Bala, Professor Bala, I should not say Mr. Professor Bala, as usual with us, and our Sudhakar. From where, Sudhakar, you are attending? Sorry.
Vancouver, Canada.
Ah, from Canada. Friends, he is joining from Canada. He got up so early because of time change. And in minus, what is the temperature, Sudhakar?
At Vancouver, it is at this point of time, it is about 6 degrees.
And still he is up in such an early morning to attend this.
No, this is not early morning. This is not early morning. This is late night.
Oh my goodness, late night. So he's not sleeping.
Yeah.
Thanks, Sudhakar. So with this, I thank all our panelists of today's webinar for joining us on our knowledge sharing journey on behalf of entire team of Meta and Meta. Friends, today's topic is very crucial. What Meta and Meta intend to put before our professional friends that how important is CS, not only CS, even a CA professional in this entire fundraising activity in whatever form the company does, and what all you should know. As you know, in IPO, SEBI has mandated certain certificate which is to be signed by company secretary in practice. Such an important role PCS has to do, and as an employee CS, he or she is the center of this entire flow of information and coordination. Everyone look at that person, and as you've seen in the advertisement also, his name number comes, his or her. So such an important position. With this, it is necessary that every professional give importance to this knowledge. With this introduction, I'll request Mr. Nakul to say a few words on the topic, then Sudhakar and Bala, and then Kinjal, you can start the presentation. Over to Mr. Nakul. Thank you.
Dipti, you can see the number now.
Okay. Thank you.
So good morning, and first of all, thank you Mehta and the team, Dipti ma'am, Sudhakar sir, Bala sir, for inviting me to share my thoughts on this one of the significant uh, topic. As we are seeing now, India is growing, and the new age corporates are not shying away from coming for entering into capital markets to untap their potentials and raise funds and add to India growth story. So there are many practical aspects where a company secretary in employment as well as the practicing side of the profession plays very key and notable role. So I would be happy to add whatever little bit contributions I have from the practical side of the functioning, how things pan out on the floor. So I'd be sharing my thought on that. Thank you.
Sudhakar, please.
Yeah. Good morning, everyone. I always compare the certain corporate actions like this, that with the past, what we used to have. If I compare for IPO pre-SEBI era and post-SEBI era, in fact, in the good olden days prior to SEBI thing, that for any company secretary, there used to be 4 milestones in his life: incorporation of a company, bringing a public issue, after that, merger amalgamation, and then voluntary liquidation and winding up. So, in fact, if we are handling an IPO, it used to be very few company secretaries who used to have that kind of a chance. At that point of time, we used to have only one regulator, that is Department of Company Affairs in those days, and you have to deal with only Companies Act. Of course, stock exchanges are there. In the stock exchanges also, you have to see which is your regional stock exchange, and after that, apart from other things, where all you are going to list your shares. So, to a large extent, though they used to have uniform procedure, but some stock exchanges have to have some kind of their nuances also. Though it looks like it is a bit easy in those days, but the problem was there were no intermediaries. The way we have intermediaries, advisors, and so many people are now, the number of advisories, intermediaries in those days was very few. So the company secretaries used to struggle to go to the ROC, check the procedures and all those things, and then go to the stock exchanges, all those things. Getting the prospectus cleared from ROC itself used to be a Herculean task in those days. Now, if you look like now at this point of time, post SEBI, it is much, much more complicated to bring a public issue. One side, the advantage is there are so many intermediaries are there who are going to advise you. They will take care of the major responsibilities SEBI has entrusted upon them only, of course, apart from the company. So to a large extent, you got the burden sharing. But as a company secretary, you have to deal with not only the Companies Act, not only with ICDR, but you have to also you have to have a thorough knowledge about Companies Act, ICDR, LODR, PIT regulations, and also the takeover regulations, because your promoter's equity is going to get changed. So you have to see that what sort of disclosures you have to give under takeover regulations. 6 months prior to that, the moment you file your DRHP, PIT regulation starts applicable to you. At the same point of time, what sort of complications are there in ICDR, and then of course Companies Act, you have to see that. Apart from the knowledge of the regulations, it is the responsibility of the company secretary to also ensure proper due diligence before they are filing with the DRHP. That is very, very important, and this due diligence It can done by the practicing company secretaries or by the legal advisors, whoever it may be, but thorough due diligence is very much required. Normally, people think this is the end of it. According to me, it is not so. The mindset of the board is very, very important. Whenever you are bringing a public issue, it is the responsibility of the company secretary also to prepare the promoter to come with the public issue, because the mindset of the promoter is very, very important. Say, for example, once your shares got listed, anything happens in the company, you have to disseminate the information, especially Regulation 30, which is a very, very sensitive regulation. The promoter may understand that, may not understand the importance of that. So it is the responsibility of the company secretary to educate or to give that sufficient knowledge to the promoter once the shares got listed to in the public or in the stock exchanges, what sort of information to be disseminated, at what level it is to be disseminated and all. At the same point of time, equally the mindset of the management is also to be aligned with the mindset of the board. So this is very important. Again, the management also have to understand that the responsibilities, accountabilities of the management have become much more than what it was previously. So according to me, the company secretary himself has to gear up before bringing the public issue of the company. One side it is about the knowledge, and one side about the handling the board and the management. So this is a very good opportunity for a company secretary to equip himself. And in fact, I must congratulate all of us that Mehta and Mehta is organizing this ICDR series. And of course, any CFO's life, that there are two ways of funding, as we know, that equity as well as debt. Though Deepti ma'am has mentioned about that we are going to have that equity series, but we will certainly also we should focus upon debt series, which we will do it post this particular series is over. So I give a pause here, and I'm Deepti, I'm handing over back to you. As and when I need to, I will pitch in then. Thank you.
Thank you. Yeah, Mr. Bala, quickly, and then Kinjal will start.
Good morning to all of you. I really have a great pleasure in welcoming you all on my own behalf and also on behalf of Mehta. As both the panelists already shared a lot of things, I won't touch upon anything on the subject because our presenter herself is going to touch upon the nitty-gritties of the issue. The only thing I would like to say is, handling the IPO is actually considered to be a rather a premier milestone in any company secretary's career. That is one thing. Because what happens is here, he actually comes across with the pinnacles of the corporate compliances, legal, coordinating all the people, involving in the strategic planning, all those things. Secondly, in the recent past, we have seen there is an IPO boom, which has been actually taking over in 25, 26 years. The maximum IPO which has actually happened. There are more IPOs are likely to come up in the current year also, which is according to the news available. So naturally, you want us to gear up. If you want to achieve this dream, we love to be prepared. And second thing is, when we talk about the ICDR, as Sudhakar puts it, it is not only the Companies Act and the ICDR regulations, but also other applicable acts like PAMA, RBI regulations, etc., and other thing and all, depending upon the nature, industry, business, and stakeholder, etc., and other things are also there actually. And apart from that, the moment you go for the listing, right from the day one, all the compliances are applicable to you. There is no escape. So that means the preparedness, that is to equip with compliances from the day one. The lot of order of the job is required, identifying the independent director, getting the committee formed, getting the policies in place, putting the system in place, all those things are there. I think that is what our presenter is going to take, our presenter being a CA and a CS, and having worked with one of the big four firms, and they work with the very strategic checklist, etc., and all this thing, which she will be very aware of it. We have a greater advantage of she having both the professions. And sir, our today's presenter, extraordinarily having a brilliant experience in handling the multiple IPO issues. So naturally, we love the benefit of his personal sharing, the nitty-gritty, the issues which he has faced, which will be of great help to us. Of course, Sudhakar is our veteran. He will definitely pitch in wherever he is there. We know all those things. I don't know to mention separately about that. I think I'll stop here. I'll ask our presenter to take us through the presentation. Over to Kinjal, please.
Yeah, can you start sharing and just give brief idea what you are covering today, so participant will have.
Yeah,
Thank you
she has put
Sarika,
us.
for joining. Yeah,
Yeah,
sorry.
she has put an introductory screen giving the topic. Yeah.
Okay, sir.
Yes. Hi. Good morning, everyone. So, as we know, today's topic is IPO on the main board with major focus on ICDR regulations. We have taken up this entire series of ICDR, because I think it's one of the most important regulations that are out there. And I don't think Mehta and Mehta has covered this in this much depth before. So, this regulation essentially covers everything required when a company wants to raise funds and issue capital. Today's topic is focused on initial public offer on main board. So we will be looking into several aspects, be it the regulatory architecture, the key definitions involved, eligibility norms of company wanting to list on the main board through IPO, conditions required, the structure of the offer that they want to issue, IPO process step by step, the intermediaries involved and their role in the entire process, the offer document, what requirements are there under that, and promoter contribution requirement. This is only the first half of the two sessions we will be holding on the IPO, because it's a big topic and there are a lot of requirements for a company undergoing IPO. So, as we know, IPO for any company is one of the biggest events that happen in a company's life. So the kind of uh, shake up that happens in the company when it undergoes this particular event is humongous. So it is very important for the company to be aware about and have the expectations and planning beforehand, going into this particular process and knowing what they are getting themselves into. And in my experience, no company has really ever been prepared going into this particular process, because there's always surprises that come about in this particular process. So, when we're talking about IPO, it is the process by which an unlisted company offers its securities to the public for subscription for the first time and lists them on a recognized stock exchange. In India, this process is governed by an interlocking framework of legislations apart from ICDR also. So let's just have a look in terms of how they kind of interplay. The first being the SEBI Act, which establishes SEBI, who is the market watchdog for all the activities taking place in the capital market. These are essentially SEBI regulations. And when a company is looking to go into the IPO, this is one of the it is one of the main regulators that looks into this process. Then you have Companies Act, as we know. You have sections 23 to 72 that deal with prospectus, allotment, capital structure, and section 62, 42, 68, 186 are kind of relevant for this particular IPO process. Then you have SEBI LODR requirements. As we know, once the company gets listed, LODR becomes applicable, and you have even when the company is due to be listed, a lot of LODR regulations become applicable. Then you have securities contracts, underlines the listing process. And then you have certain PIT regulations that become applicable when the company becomes due to be listed. FEMA, if there is any foreign funding involved, and SAST regulations in terms of takeover triggers, etc. So the ICDR ICDR regulations are not just standalone when a company is going for an IPO. They should be read in conjunction with all of these other regulations that are out there, and look at them concurrently. So, under SEBI ICDR, what is an initial public offer? It is an offer of specified securities by an unlisted issuer to the public for subscription and includes an offer for sale of specified securities to the public by any existing holder of such securities in an unlisted issuer. So let's just break it down. The issuer must be an unlisted company, and so it should not have any of its equity shares already listed on the recognized stock exchange. And the offer may be issue of new shares, or it can be sale of existing shares that is offered by the existing shareholders to the public. Specified securities includes equity shares and other convertible securities such as ESOPs. And like I mentioned, this is given to public for subscriptions. And the minimum requirement for a main board IPO is around 1,000 allottees. Let's just go through some key definitions. These are only few of them. I will be explaining others also as we go through the presentation. So the first one being QIB. Now, QIB includes your mutual funds, AIFs of Cat 1, Cat 2, FPIs that are, other than individuals, commercial banks, insurance companies, SEBI registered venture capital funds, provident funds, all of them having corpus of over 25 crores, NPS trust, etc. Now, these play a central role when it comes to things like price discovery in a book building process. And they kind of signal that this is a strong IPO that investors are looking to invest in. They are given at least 50% allocation of the net offer, which is reserved for QIBs. Of this 50%, 60% is allocated to anchor investors before the IPO opens. Now, so these actually form the backbone of the IPO execution. They are driving valuation, signaling institutional confidence in the IPO, and effectively determining whether an issue succeeds in the market or no. Coming to the second definition, which is anchor investors. Now, as I mentioned, anchor investors are a subset of QIBs, and they are they provide validation, support, price discovery, and build market confidence for the particular issue. They are allotted at a uniform price within the price band, and they have certain lock-in requirements. And any subscription flows back to the QIB and anchor investor buckets. And they help in essentially setting the tone and credibility of an IPO. So when you have all the bankers doing the road shows, etc., and when they are building the book, they want to have the most reputed QIBs and anchor investors for the particular IPO to ensure success of the IPO. Then coming to the non-institutional investors, any investor who is not a QIB, whose application value exceeds 2 lakhs, is considered a non-institutional investor. This could be HNIs, corporate bodies, trusts, NRIs, etc. And then coming to retail individual investors.
Friends, we have with us Mr. Jay Switlani from Vivro, one of the BRLM from Ahmedabad. And when it's very fortunate, Jay to have it. And I have said that requested as and when he wants to add anything with you, sharing his experience, he can add. Thanks, Jay, for joining. Yeah, can just start.
Yes, coming to retail individual investors, we know an individual who is a resident or NRI applying for securities of total value not exceeding 2 lakhs. And there is a quota for this particular category of investor, which is minimum 35% of the entire net offer. If the company is going through the standard route of IPO. Now, coming to eligibility for main board IPO, not all companies are eligible to go for an IPO on the main board.
1 minute, Kinjal, there is a question. Better we can take it. There is a question. Mr. Bala.
Minimum 1,000 allottees include retail investor only or anchors or QIB employees reserved portion also.
So allow me to answer.
Yes,
Yeah.
please.
So allottee in the IPO. So if my IPO size is 25% of the post-issue size, then whosoever invests in that 25% would be considered under 1,000.
Thank you, Jayesh. And there is another question. What is SNIL and BNII? SNII and BNII.
It is small HNI and the big HNI. There are now two categories.
Yes, put. Okay.
Can US passport holders having a NRO account in India invest in IPO through the
I think
NII quota?
not at this juncture we can take it. Let's thing go on.
Okay.
Only for presentation we will take it this question which is relevant. What is query on the presentation? Then at the end we will take all practical questions. Thank you, Jasmine. Kinjal, go ahead. We'll take this question, but at the end, Mr. Ankit. Thank you.
Coming to eligibility norms for any company looking to go for listing on the main board, the company, so there are two entry norms for this. One is the profitability route and the other is QIB route. So let's look at the first one, which is the profitability route. Now, this is the standard route for established profitable companies, and the issuer must satisfy all of these requirements before applying for IPO. So the first one being, it must have a net tangible asset of at least 3 crores in each of the preceding 3 years, and not more than 50% of the net tangible assets held in monetary assets. If this is exceeded, then the excess must be committed for utilization in business project. It also must have a minimum average pre-tax operating profit of 15 crore, calculated on restated and consolidated basis. We will look into restated financials in a little bit. During the 3 most profitable years out of the immediately preceding 5 years, subject to condition that at least one of the 3 most profitable years falls in the immediately preceding 3 years. So let's just look into it a little more. So 3 of the last 5 years must have minimum average pre-tax operating profit of 15 crores. But of these 3 years, 1 year falls in the immediate 3 preceding years. Also, the company must have a net worth of at least 1 crore in each of the preceding 3 years. If there is any name change that has occurred in the last 1 year, at least 50% of the revenue in the last 1 year must be from the activity linked to this new name. Now, like I mentioned, restated financials are historical financial statements that are reworked into a consistent, standardized, and IPO-ready format. So financials, as we know, a lot of changes in DS, etc., has come in place. Apart from that, if there are any policy changes, then these financials are reclassified, adjusted, and consistent consolidation and comparable presentation along all years. So we want to ensure that all accounting policies are consistent in all of these financials that are disclosed in the offer document. So, like I mentioned, these include correction of prior errors, for IPO documents, etc. But they remain based on audited numbers itself. It's not like the company's changing its financials altogether. And all of these adjustments that are made are clearly disclosed and certified by the auditor of the company. Coming to the second route, which is the QIB route. Now, this route is specifically designed for companies which are high growth. By that I mean your startups, etc., that have high growth potential, but which may not yet meet the profitability requirement criteria. Now, these include your new age tech companies, new startups, etc. So there are certain conditions for companies going for an IPO through this route. The issue must be made through the book building process. So book building is absolutely mandatory in this particular route. We will look into what exactly book building process is in a bit. The issuer must allot at least 75% of the net offer to qualified institutional buyers. If the minimum of this 75% is allotment is not achieved, then the full subscription money must be refunded. The net tangible assets, net worth under this issue. But 100% underwriting is required. The book building process, like I mentioned, is the mechanism used in IPO to discover price, discover the final issue price based on investor demand. So this is done by BRLMs when coming for an IPO, and so the price is not fixed upfront, but it is fixed through this book building process. So, like I mentioned, instead of saying that the shares will be sold at an X price, they set a price band, say 100 to 120 rupees for a particular share. They invite bids from investors within this range, and they build a book of demand at different price levels. And they then use this demand to determine the final issue price or the cutoff price. Now, so like I mentioned, first there's a price band announcement, and this is disclosed in the RHP. And bidding period is around 3 days, where investors bid various price, retail investors bid at a cutoff price. Then there is demand aggregation. Bids are recorded at each price level, and a demand curve is formed to show who wants how many shares at what price. And the cutoff price is determined as the highest price at which the entire issue can be sold. Shares are then allotted.
There is a question has come actually. Does the previous 3 years means 3 years prior to the issue or 3 financial year?
3 financial years.
Yeah, this will be
You want
3
to say anything, you can intervene. Yeah.
Yeah, it will be a 3 financial year prior to the year in which you are going, the audited financial statements. That's what I would say this. Either net tangible asset is total asset less intangible asset and operating profit minus EBI, TDA or EBI.
Sorry, let me interject over here also. But for example, if the company is say going for the issue in December, then the SEBI might ask up until say September or something. So you have the latest financials available. But for requirement purpose in terms of eligibility norms, it's financial years. But when it comes to say disclosure requirements, then it's the latest period essentially.
The stub period is also required to be included in restated fiscal.
Somebody is putting a question, is a profit is taken for the last 5 years or 3 years? Please check, 5 years is not required. That's what he says.
So I said 3 most profitable years of the previous 5 years.
Okay. They thought that 5 years. Okay. Yeah. People are raising the hand. Friends, we will not able to allow everyone to speak. We will allow you at the end of the session. Thanks.
Yeah, people will have the opportunity to speak at the end, but in between, whatever you have the queries, you can keep putting on chat box. We will answer it. Yeah.
There is one more question. Can we pick any 3 years or it needs to be consecutive 3 years?
No, three of the
Ah, yeah,
Huh.
Jason.
So it is 3 years, not 5 years.
Hmm.
Last 3 years you have to take.
The
Immediately
question
proceed.
is that 3 years or it should be consecutive 3 years.
Consecutive
Dipti,
3 years.
Dipti, it will be the year preceding 3 consecutive years. You cannot pick up any year, whatever you want. Last 8 years, I will pick up 3 years. That cannot be the case. It is very clearly, law says it's a preceding financial years.
Yeah.
So that means it
That's
should be,
why
yeah,
if
it will be
somebody has
proceeding.
said,
Including the stub period. Including the stub period.
Yeah.
yeah, so somebody has put in no concept of choice of 3 years out of 5 years. It is immediately preceding.
Yeah, that is correct.
Correct. Absolutely right. It is actually
And
preceding 3 years.
for calculating the profit, it is full 3 financial years. The
Hmm.
stub period is for the purpose of the disclosure. But
Disclosure.
for computing the eligibility, it has to be 3 full financial years.
And what is stub period?
Stub period is, suppose if I'm filing in the month of say December, as Madam has just pointed out, so I can't use March number because it is older than 6 months. Then I have to compulsorily draw the either June number or September number. So that is called a stub period.
Okay, thank you.
But for calculating the eligibility, I have to take full 3 financial years.
Okay.
And there was one question on the EBITDA or the EBIT.
Yeah.
So theoretically, it is EBITDA, but many companies on a safer side go for a PBT, that is a profit before tax. But EBITDA is otherwise an acceptable choice.
Yeah,
In fact, normally what happens is any financial statements you present, it should not be more than 6 months older. If it is more than 6 months older, the regulator always asks, get a financial prepared for the last 6 months, freshly audited and submit. That is what it happens.
Yeah. Thank you. Thank you, Jasbek. Mr. Nakul, you wanted to say anything. Yeah.
No, I was adding to that only, which Bala sir and Jayesh bhai has already updated. So the requirement of previous 3 full financial years, and of course the stub period is for disclosure. It should not be older than 6 months as on the date of filing.
Okay. Yeah. Yeah, Kinjal, go ahead. Friends, we have clarified previous 3 immediately financial year. So now I think we will stop at 5 years, 3 years. Okay. Yeah.
So coming to Zomato actually was one of the major IPOs through this QIB route. And they filed its DRHP in April 2021 and got listed in July 2021 through the QIB route. And the company had actually reported losses of 2,385 crores in financial year 21 and did not satisfy the profitability criteria. But they were able to come out with a 9,375 crore IPO, of which 7,500 was and it was subscribed, even though the company didn't have a profitability at the time of listing. And on listing day, the stock opened at 105 against the issue price of 76, which is a 51% premium. And so this kind of an IPO demonstrates that the QIB route can be a legitimate pathway for a well-funded loss-making company with institution investor confidence, where they kind of validate the business model, even though the company is not making profit. Now, there are certain conditions for both entry norms 1 and 2. We'll just go through that under Regulation 7. So, regardless of the entry norm chosen, both all IPOs, all companies and issuers must follow the following conditions: that all specified securities held by promoters must be in dematerialized form prior to filing of the offer document. Promoters and promoter group entities must not have been prohibited by SEBI from accessing capital markets. The issue of promoters, directors, or selling shareholders must not be debarred from accessing the capital markets, and none of the promoters or directors of the issuer is a fugitive economic offender, as defined under the Fugitive Economic Offenders Act 2018. The company or its promoters, directors must not be willful defaulters on payment of interest or principal to debenture holders, fixed deposit holders, or any public financial institution in the last 3 years. And the issuer must not have outstanding convertible securities or any right to receive equity shares other than mandatorily convertible securities to be converted before RHP filing, ESOP based allotment, and SARs exercised before RHP filing. In case of name change, like I mentioned in the last year, 50% of the revenue in the preceding year must be from the new business activity. So these are just basic conditions for anyone wanting to go for a main board IPO. Now, like I have mentioned before, the SEBI is very clear that any securities that increase the right of existing shareholders will not be allowed. By that, I mean that all convertible securities must be converted before the listing, and no such convertible securities are allowed in it may lead to it will lead to disqualification of the company for the IPO if these are still outstanding before the issue. There is an exception of ESOP and SARS, where they can remain outstanding, but certain regulations and requirements must be followed. And mandatorily convertible securities, which are converted before RHP filing. So, like I mentioned, all of these convertible securities must be converted before RHP filing. So when through the IPO process, the BRLMs and lawyers ensure that there is a cap table audit. They all convert all the CCPS is converted to equity before RHP. And the relevant resolutions are passed, and they will ensure that there's a clean cap table at the time of DRHP filing. So now given that you have these days many venture capital backed startups, private equity startups that do have all of these CCPS instruments and convertible notes as investment instruments in these companies, it is essential that this particular step and this particular requirement and condition is taken into account to avoid disqualification. Now, let's get into preconditions and disqualifications for that may lead.
That is
I would like to add one more thing. There's a question. What about NCDs?
Yeah.
NCDs are non-convertible debentures, though they sit into the debt side and they are not part of the cap table. So that would not come into picture while speaking about the capitals.
And there is other question also, Mr. Bala can take, or just say demat compulsory for promoter group, directors, KMP, selling shareholders. Check. With effect from 8th October 25.
Yeah, that is correct. That is correct. In fact,
demat is compulsory for everybody. Without the demat, you cannot go. All the issues have to be done only at demat, only at demat. That's it. There is no exception.
And just to add one more point, that what Kinjal has mentioned, that ESOPs, though they can continue, the full details of the ESOP is to be given in the DRHP, offer document, correct. How many, I mean, what is the total size, what sort of terms and conditions, and how many are already, assigned, how many are yet to be, granted, and all those details are to be given completely.
And cap table should be cleaned before DRHP filing or HP filing.
So at DRH, it is expected by DRHP we should complete all the capital cleanup. But if there are certain processes which are required, time time consuming, then it is expected by RSP it should be done. So RSP is your final deadline.
Yeah. And there is
So
one
before
question.
RHP, there is a stage called UDRHP where the SEBI gives us the final nod to launch the issue and the RHP is approved. So in the UDRHP itself, which is just a few days before the RHP, it is ensured that all these requirements are fulfilled.
There is one more question. Can a company satisfying profitability criteria, Regulation 6.1, can still opt for QIB route, Regulation 6.2?
Yes.
Yeah, yes.
See here, Dipti,
Yeah.
to answer your question, the choice is yours. Because if you want to go profitability, yes, this is the choice is there. If it is not there, the other route is there. But at the same time, nothing is actually prohibiting the choice of what you want to exercise. That is actually with you. Because regulator is not going to interfere your business. Regulator leaves to you to do the business the way you want it. But he is only given the avenue. If you want to go through this, this is the criteria. That is what they are saying it. If you choose the other route, you can always choose the other route. There is no problem.
Mr. Bala's all-rounder role is today I am moderator and is doing this. Thank you.
No, Dipti, because
I
you see,
appreciate Mr. Bala your knowledge. Thank you.
no, Dipti. Luckily, I happen to handle the IPO. I happen to handle about 3-4 due diligence, etc. in the takeover process. So, a bit of a knowledge which I have. That is the reason I am sharing it. Yeah.
Okay. And what is the difference between alternate book building method and book building method?
I think she is coming. The presentation is covering that. In fact, presentation
fine.
is
Go
future
ahead.
is covering the book building. It's also covering the disclosure with a reference to the document filing. All those things she is covering. She has got a slide.
Go ahead, Kinjal.
Coming to who all cannot participate in an IPO. So certain disqualifications for your directors, promoters, selling shareholders, and the company. The directors must not be disqualified under Section 164 of Companies Act. And they also must not be declared willful defaulters by any bank, financial institution. They must not be barred from capital markets by SEBI. In this company or through any other company in which they are directors, then they must not be fugitive economic offender, and director of a company that has been wound up for default. This director must not be associated with that kind of a company. Coming to promoters, they are prohibited from accessing capital markets they must not be prohibited from accessing capital markets by SEBI. Or if there is any pending case in this under this particular topic, they must not be involved in fraudulent conduct in any capacity in the last 3 years. In case of offer for sale, selling shareholders must have held shares for over 1 year before RHP filing. And they must not be declared willful defaulters, and there should be no pending SEBI enforcement actions against the promoters or the selling shareholders. Coming to the company, there must not be any willful default on debenture, FD, or any public financial institution payments in the last 3 years. There must not be any outstanding convertible instruments except for permitted categories, which we just discussed. Application rejected by exchanges within the last 6 months will not be permitted. There must be cooling off period of 6 months. Then if there's any pending NCLT insolvency proceedings against the company, then they will not be permitted to go for the main board IPO. And group companies with any kind of undisclosed regulatory actions, etc., will not be permitted to go for the IPO. When it comes to litigations, etc., the DRHP, there's an extensive disclosure requirement under the DRHP, where all material civil, criminal proceedings pending against issuer, promoters, group companies, and directors must be disclosed. Any actions by SEBI, ED, CBI, Income Tax Department, Customs, GST authorities, etc., should be disclosed. Show cause notices, disciplinary proceedings, etc. In the last 3 years, There is an amendment which has come here when it comes to material civil litigations. We will be covering that later.
There is a question has come actually that disqualification of the directors, promoter of the issuer should be complied with at the time of filing a DRHP or RHP. Is this requirement checked at any specific period or at a specific point of time?
So right before the filing of DRHP, there shouldn't be any disqualification in terms of 164.
Correct. In fact, actually, according to me, it is the responsibility of the company secretary during the due diligence process. He should
Right.
ensure that the company is qualified to even file the DRHP.
Right.
So all these disqualifications are applicable as on the date of your filing the DRHP. If you are disqualified on any parameter,
Then we cannot
obviously,
file.
yeah, even
I
if you
think,
file, it will be rejected.
Yeah.
I think Kinjal is actually going to discuss the IPO process in which she is be talking pre-IPO. I think this point is categorically being discussed elaborately at that particular time. I think people will get to know more on it.
One more thing, Sudhakar sir, I would like to add what you are saying. See, the due diligence certificate itself will cover this point to make sure where we are, fulfilling all the eligibility criteria, without which the BRM will, they will not even give us a go ahead to file that DRHP. So the legal counsels and the BRLMs will ensure from the company side that all the prerequisites of eligibility norms are complied before they actually file the DRHP.
Absolutely correct. Once the due diligence is done, it is there. Yes, absolutely you are correct. There's another question is there. Which are the group companies, common directorship, how to define?
Group company definition is very much given in the ICADR. It talks about the related parties in terms of Companies Act. I mean, it's an inclusive definition which covers the related parties in terms of Companies Act, as well as the companies with whom there are related party transactions. Those are disclosed in your financial statements. Those are termed as group companies. In addition, if the board thinks that there are material entities and those should be covered under the group companies, definitely it's a call for such additional entities to be covered under that umbrella. But of course, those with whom the RPT transactions have been reported in last 3 financial years are definitely gets covered under the group company.
And if
What
I'm
about
not wrong, even in the offer document also you have to give what is the meant by group companies. You have to define that also.
Yeah. So
what?
it is
What about
the last aspect of board taking a call in addition to the related party transactions, entities with whom these transactions have done. If the board identifies additional set of entities as a group entity, then that gets covered in the definition and part, and accordingly the offer document have the list of all those group companies.
I think Bala, why can't we give some time to Kinjal to complete her flow, to some extent, then take up the questions, because the questions will be too many. Otherwise, she will not be able to move further. I think the continuity of whenever anybody make a presentation, the flow is very important for them. So I think we should allow Kinjal to some extent, and after that we can take up the questions.
okay?
That's what my view.
Nakul, it's okay?
Yes, yeah, it's fine. Actually, that should be the ideal flow because it would, it would, I concur the view of Sudhakar sir. So the flow is
Okay, fine. Okay, Kinjal, go ahead. Now we'll take question at the end only. Sorry, friends, but we'll take every questions. To maintain the flow, we are just continuing. Okay.
No, need not. Dipti, Dean need not be at the end. Let her do make presentation. After 15-20 minutes, you may be able to take up the relevant questions.
Okay, fine.
Yeah, that is what we are trying to do because as and when the things comes over, whatever she is presenting relating to that, we are trying to take. Where she is going to present, we are saying it is coming up later.
So also one of the things that needs to be considered is that the company cannot issue more shares after filing of the DRHP until the day of listing. In the middle, the company cannot issue any additional shares in whatever form, be it equity shares, preference shares, etc. The company cannot issue any additional shares until the time of listing.
but there could be pre-IPO dilution possible by the promoter selling shareholders if they are any.
Yes, but any kind of preferential allotment, right issue, QIP, or bonus issue,
Yeah.
unless the DRHP itself discloses full details of such proposed issues, it's not allowed. Only ESOP allotments, SAR exercises, SAR exercises, and refund of application money are exempt from this particular requirement. Let's look at, one of the cases when it comes to disclosure, non-disclosure instances. So in DLF's 2007 IPO, which was for 9,000, almost 9,200 crore, it was India's largest at the time. Post-listing, SEBI investigated allegations of material non-disclosure in the prospectus, particularly regarding pending disputes and related party transactions involving KP Singh family, promoter family. SEBI found that DLF had not disclosed certain pending cases against its promoters. And then in 2014, SEBI banned DLF and six of its former directors from accessing capital markets for 3 years and levied heavy penalties. This case established the foundational principle that the true and adequate disclosure standard under Regulation 24 of ICDR is absolutely non negotiable. And selective omission of litigation, even if issuer believes the case to be frivolous, can constitute a violation. After this case, SEBI became very very cautious when it came to such kind of disclosures and risk factors in the RHP, DRHP prospectus, etc. Coming to offer structure. Now, offer structure is basically how you're going to be structuring the entire issue that you're coming up with. It is one of the most consequential structural decisions in an IPO. It is which is the proportion of fresh issue to offer for sale. There may be times when the company is coming with only fresh issue.
Kinjal, 1 minute. Somebody is asking a related party transaction here. If there are 20 companies with whom there are RPT transaction with the issuer company, or we need to disclose all the 20 companies as a group companies in the DRHP, or we can show only the top 5 companies group companies?
Mr. Nakul, Mr. Jayesh, who is taking?
Yeah. So we have to disclose all the group companies.
No, 1 minute. See, according to me, if the company is having related party transactions with related parties, that doesn't mean all of the related parties become the group companies. It will not be so. Not necessarily, because related party definition is under the Companies Act and as well as LODR is entirely different. So the moment you have transactions with related parties, how can they become the group companies? Not necessarily. They may be outside the group also. Still, they may be a related party to you. So it is for the company to decide that which are the companies, which are the group companies, and they have to give that group companies things in the offer document. There is some related parties may be group companies, some related parties may not be the group companies.
Also, there may be cases where there aren't related party transactions with certain companies. So we had a case where one company going for IPO was held by a Japanese company who had thousands of subsidiaries all over the world. The Japanese company held stake in a Netherlands company, and the Netherlands company had a holding company in India through which they held this particular company. And so many of these companies going for IPO come with very complex structures too. So when it comes to defining group companies, so these are calls that are taken by lawyers and BRLMs. And then disclosed accordingly in the prospectus and DRHP.
Somebody is putting a question: if the issuer company's subsidiaries or associates have any NCLT proceeding pending for merger, etc., then whether that will be okay.
That should not be a problem according to me. Only thing is they have to give that whatever the status and other things in the offer document. Full details are to be given.
Litigations, insolvency extended to group companies also, or to the issuer company only? As if group companies are into the insolvency, serious litigation, it might impact the issuer company also. Answer whether it will be relevant.
So the litigations in of the group companies where it will have impact on the issuer company would definitely require that disclosure. But if such disclosures are made, SEBI may direct you to add relevant risk factors and give forward disclosure that how it would potentially impact the company, and accordingly that disclosures would be ensured.
When we
If,
talk about impact on the company, it is not only the financial impact. Sometimes it may so happen that even the reputation of the listed entity may get damaged. If that kind of cases are there, even that is also not to be disclosed. Because any kind of impact means not necessarily it is to be only the financial impact, even otherwise also that is to be given. Any kind of information which is going to impact the share price in the market post listing, that information is to be given definitely in the prospectus itself.
Yes, Kinjal, go ahead.
So SEBI came up with a recent amendment with regards to this. There was a lot of confusion in terms of, what is material, what is not material, how to define, say, even a show cause notice, is that material, not material. So then SEBI came out with an amendment saying, which we will discuss later, that the board needs to define a policy, materiality policy, basis which such disclosures will be made in the offer document.
In fact, Regulation 30 is the one. Apart from Regulation 30, there is the Industry Standard Forum note is also there. What sort of disclosures are to be given as far as Regulation 30 is concerned? Those are to be taken care into.
But this is specifically for the offer document.
Correct. I agree. Yeah.
so even for that, you need to have the materiality policy for a disclosure in the offer document, where the lawyers, company team, the board take the cautious call that apart from the regulatory requirement, those are mandated to be disclosed. What else criteria can be applied to define a materiality, given the economics and business environment in which company operates? Like if certain company has too much of a export exposure, then the geopolitical situation in current scenario, how it would affect its long term, mid term, and short term, that factor would also be considered while determining the materiality policy, and accordingly the disclosure would come out.
In fact, it is not out of place for me to mention here that the entire board has to take onus of the information furnished in the offer document. The independent directors, even if they were appointed one day before also, but as on the date of the issue, if the director is there on the board, he has to take complete responsibility about the information what they are furnishing it. So several times what happens when they are coming with an IPO, they always crave for that independent directors who are eminent people and all those things. And one should not get tempted to become an independent director in IPO companies unless until they are completely convinced that whatever the information they are furnishing it in the offer document, they completely have the onus of that.
Yeah, Kinjal.
And it is insured by way of a standard certificate that they have to give.
How much it will come to their rescue is a question, and it's a big question mark.
Yes, sir,
But
absolutely.
reasonable. See, independent director may not know everything, but they should have reasonable assurances, maybe from the merchant bankers, maybe from the BRLMs, maybe from the companies and all those things. They have to take some pain to understand the whole thing. They cannot just simply shut their eyes and say that, look, I am ignorant about all these things. That will not be accepted by SEBI.
So, sir, I would like to add one more point over here. It's not just about IPO, but looking at the holistic picture of long run transition. It triggers a cultural shift. Like you have initially you have said, the promoters and the board has to develop that mindset of from becoming a privately owned company to a public company. That transition requires having appropriate mix of independent directors who understand the business and the culture the company is operating within. So it helps the company uh, to have this smooth transition in the overall IPO journey. And while this journey is going on, the independent directors will also get sufficient time to understand the nitty-gritties and the disclosures and the compliance status. Thereby, they will be confident enough to give that kind of and own that responsibility in the IPO.
Correct.
Thank you, Mr. Yeah, Kinjal, go ahead.
Right. Coming to offer structure, this is one of the most consequential structural decisions in an IPO, and it is the proportion of fresh issue to offer for sale. There may be times where companies are coming with a complete 100% fresh issue. There have been times when companies have come with 100% offer for sale where investors are just getting an exit and there is no actual fundraising for the company. And there are times, most of the times, you have a combination of fresh issue and offer for sale. Now, the proportion of this has an impact on, a significant impact on your legal, regulatory tracks, reputational dimensions of the company. So, just let's go through both. So, fresh issue. In a fresh issue of shares results in new shares being issued by the company to the public, and the proceeds actually flow to the company and must be utilized for the stated objects of the offer disclosed in the offer document. Now, these proceeds are credited to company's bank account, um, and objects of the offer letter must be specifically identified: capital expenditure, working capital, debt repayment, acquisition. Uh, Disclosure regarding this must be appropriately made in the offer document. Then, utilization of fresh issue proceeds is monitored by a monitoring agency. This is a SEBI registered credit rating agency or a bank if fresh issue size exceeds 100 crores. And if there's any deviation from objects, it requires approval of 75% of the public shareholders via a special resolution.
And it is
They are
also
also
and it is
required.
also the responsibility of the audit committee to ensure that monitoring funds, apart from the monitoring agency, also responsibility of the audit committee. Till the time
Yes.
the last rupee is utilized for the intended purpose.
Yes.
Somebody is actually putting a question, no cap on GCP at 100 crores. Please check. That's what somebody is putting.
Right. So there is a requirement. So out of the funds raised, funds utilized for general corporate purpose is capped at 35% or 100 crores of the fresh issue. Coming to offer for sale.
Cap, Kinjal, I would like to add there are precedences available. The 100 crore cap is not there. 35% is the limit for GCP, but 100 crore cap is not there.
It was introduced in the recent amendment.
I think it has come in the March 2025 amendment. It has come that 100 crore cap. What you said is correct. It was not there earlier, but 2025 amendment, I think it has come. I also seem to have read that actually.
Yes.
This is a recent one, I think so.
Coming to offer for sale, existing shareholders or the selling shareholders offer their shares to the public, and the proceeds go entirely to the selling shareholders and not to the company. The company receives there's no capital infusion at the company's end. Selling shareholders must have held these shares for at least 1 year before the date of filing of the RHP. And securities acquired pursuant to mergers, demergers must be approved by if held for less than a year. Now, when it comes to this particular IPO, the selling shareholders bear proportionate IPO expenses in the ratio of offer for sale size that of the entire issue. Selling shareholders must provide representations and warranties in the offer document regarding the shares being free from all encumbrances. And selling shareholders bear joint responsibility for the offer document accuracy when it comes to disclosing it to the public. And offer for sale proceeds are taxable in the hands of the selling shareholders.
Can the composition of the fresh issue or OFS be changed based on the public response for IPO?
Sorry?
Yes, it is very much possible.
And which document requires changes in the fresh issue plus OFS, or they have to change in the RHP and prospectus?
Yeah. So even RHP and prospectus, even after prospectus, the issue size can be changed. I mean, basis the actual allotment, because the prospectus is filed on the date when the issue gets closed. But if during the allotment process there are further rejections, which would trigger further, reduction in offer size, that is also fine. But that kind of disclosure is made in the prospectus itself, that the number of shares or amount is subject to final allocation and rejections to be received from the stock exchanges.
Yes. So, like I mentioned, there have been many times where companies have only come up with 100% offer for sale as an issue. So this kind of gave rise to a very interesting conversation between analysts and SEBI. So like for example, uh, in the Hyundai case, Hyundai Motor India IPO in 2024, which was a 100% OFS issue of 27,870 crore, India's largest ever at that point in time. It was structured as 100% OFS by its parent, which is Hyundai Motor Company in South Korea. Every rupee raised went to the Korean parent, and Hyundai India received no capital for its business. While legally permissible under ICDR, this structure drew widespread criticism from analysts and investor advocacy group who questioned why retail investors should fund the exit of a profitable Korean conglomerate. The stock debuted at 1.32% discount and continued to underperform post listing. So, and regulators and commentators raised policy questions about whether purely OFS IPOs serve original purpose of capital formation for a particular company, a debate which still remains active. But looking at the flip side of it, this is the idea of ease of doing business in India and having making India an attractive place for foreign players. This will and lucrative option for them. Anyway, the second case of LIC of India IPO in 2022, which was again a pure OFS IPO by Government of India, which raised around 20,557 crores, where Government of India was divesting 3.5% stake. The government retained around 96.5% holding post IPO, and all proceeds went to the government's fiscal coffers with no capital infusion into LIC. But with LIC's brand strength, the stock listed at 8% discount to the issue price and traded below IPO price for over a year, exposing the valuation and timing risks of large government disinvestment for structured OFS. One more, in 2020 IPO, and Paytm as a company had extensive risk factors. It was delayed. It included regulatory dependency on UPI, absence of clear profit model, potential conflict with Paytm Payments Bank, and these kind of risks were not adequately quantified, and the prospectus disclosed net losses financial year 2019 to 21, but provided limited investor readable analysis of the path to profitability. And on listing day, the stock crashed 27%. And post IPO, when RBI took action against Paytm Payments Bank, investors suffered further loss. And since then, SEBI has been very vigilant about requiring issuers to describe regulatory risks and specifying and identifying conflicts of interest with related entities in their offer document.
Somebody has actually put a question here, like the Paytm, that you actually mentioned, and what is the legal action available to the investor for such overvaluation? And also they are asking, is there any cases which was taken out by SEBI for the overvaluation?
My only question to the person who decides whether the company is overvalued or valued at a right price. It's a market perception. If you go to a showroom to buy a car, and if you are willing to pay additional premium for some extracurricular features, it's on the investor to decide whether to invest or not. SEBI's role is very much limited to the extent that all the disclosures are coming out transparently and are true and fair, and there is ownership for such disclosures. As far as the BRLMs, the company and the promoters are arriving at a valuation where they could demonstrate to the independent director, audit committee and the committee of independent directors to decide the price band and the valuation. And if the independent directors are satisfied that the valuation methodology adopted is fit for the issue, then it's on the company's discretion to go for that valuation. It has nothing to do with SEBI's discretion whether it's valued or overvalued. It's on you how you sell the mangoes.
So SEBI in its inspection only looks at the compliances are done properly and the due diligence has been carried out in the manner required, and the company has essentially complied with the requirements. It does not get into the actual valuations. It the actual operational understanding of the company, etc.
Yeah, as you said rightly, Kinjal, you are actually right. Regulator, some or other, they don't want to interfere in running the business of the company. The business of the company is run by the people who are actually holding the helm of the affair, that is namely the board of directors associated with the audit committee. It is up to their perception, up to their understanding, up to their diligence. But as you rightly say, yes, compliance part of it is always checked by the regulator. A particular methodology is correct, particular things you have followed is okay, compliance is done with, disclosure is made with, that is what they actually see. That is right. There is another question has been put regarding the change. Any time limit specified for the change?
Any specifics on the changes?
That means he is asking, after the receipt, can you change the composition of the offer? I think that relates to that question.
See, the time limit is that whatever changes has to be made, it has to be subjective disclosure has to come in the prospectus itself, and the change should be made before the listing, the actuals. So I would give an example of our issue of KSH International in the December month itself. So because of some rejection, technical rejections, the prospectus had a clause that it is subject to final rejections from the exchange. And when the exchange and the RTA and the company along with the BRLMs decides on the basis of allotment which comes after the prospectus is approved, usually this happens only in cases of undersubscribed issues, not in the cases of oversubscribed issues where how the definitive numbers, the X number of oversubscriptions you have. So even after your rejections, you will have the minimum quota available. So that change would only trigger in case of undersubscriptions and not in case of oversubscriptions. I hope this has.
Ronak Devda is saying, we observed that the NSE and BSE raises concern.
Mr. Bala is concentrating on SME IPO.
Okay.
Discussion. So we will take at the time of SME IPO. I think we
Okay,
are going to a special session. I know we all know that SME IPO valuation SEBI is continuously concerned, and that's why the both exchanges are concerned. It is more stricter now and all that. We will cover everything in SME IPO series. It's in there.
Okay, Kinjal, go ahead.
Right. So let's quickly go through the entire IPO process end to end. So there are it can be divided into almost 5 various steps and phases. So before this essentially happens within 1 year before the company files for DRHP, where several board resolutions for this particular IPO are passed, which involves approving decision to make an IPO, authorizing filing and appointment of intermediaries, shareholder resolution, special resolution, required that all the shares are converted to demat form.
Excuse me, in between, Mr. Bala, there was disturbance, or we can listen to Kinjal. There was a disturbance, or only I am having?
I think we are missing out on Kinjal.
Kinjal, there is a...
There is an audio problem at Kinjal's end, I think so. Kinjal, I think there seems to be some audio problem.
So you start that. I'm just checking with IT. Just hold on. Just few seconds. Because I thought I am facing the problem, but I think that's why I checked. Just a minute.
Okay, can you hear me properly now?
Yeah.
Now we can hear.
I know earlier also there was issue. I thought only I am not hearing.
No, you're right. Actually, I actually thought probably, due to some signal issue or something like that, it is happening in between. That's what I thought actually. By and large, it was coming. But recently, there's an audio interruption is there.
Yeah, Kinjal, the screen is 2-3 slides are coming. Just
Yeah, there's a double slide is there. I think presentation has
yeah,
not come
lot
out
of
properly.
there.
Yeah, perfect. You can put it in the presentation mode. Yeah, good.
Right. Can you see it now?
Yeah, very much.
Okay. Okay. Quickly running through the pre-IPO preparation for any company. This runs up to, so preparation can be started as early as one can, but around 1 year is and 6 to 12 months especially is when actually things start ramping up. You have starting with the board resolutions that approve the decision to make an IPO, authorizing filing, appointing intermediaries. There's shareholder resolution for the fresh issue of shares to public. Then you have conversion of all the shares into demat form. You have cleaning up of cap table, converting all the CCPS into equity, etc. Then you start. Then you appoint your BRLMs, legal counsel, all of these various intermediaries that are essential for this particular IPO. And if in case of any kind of restructuring of ESOP, pre-IPO placements that are required, then decisions on these are taken at this stage. The lead merchant banker or BRLM, it is one of the most critical intermediary in the IPO. It must be SEBI registered merchant bankers, and they exercise due diligence and issue a due diligence certificate. We will go through that a bit later. And they cannot, the BRLMs responsibility include preparation of offer document, due diligence of disclosures, coordination with SEBI and stock exchanges, managing the book building process, price discovery, and allotment oversight, essentially. Then you have legal due diligence tech that takes place, financial due diligence, you have secretarial due diligence that takes place. This is essentially one of the most critical time for the company, where it is preparing for the biggest change that is going to come. Then once this is done, the DRHP is filed, 3 copies filed with SEBI and stock exchange, and then if in case of confidential filing action, we will discuss that in a bit. Public announcement made within 2 working days. DRHP DRHP is then open for public for 21 days. And then BRLM issues its due diligence certificates in as required. Like I mentioned, we'll be discussing that later. Then SEBI will review the DRHP, will seek clarifications from the company. And once the SEBI issues observation letter, it is valid for 12 months. And then post which company files its UDRHP1 after SEBI observation, public announcements, etc. Once all of these reviews and clarifications are done away with, then you have, once the UDRHP1 is filed, you have the road shows, then anchor investor outreach, the book building process essentially that takes place, and price band advertisements, price band establishment advertisements are done. Then there's allocation of the issue that is done. QIBs are built into the book. Then you have, then the company goes and files the RHP with ROC and stock exchanges. And stock exchange essentially gives an in principle listing approval. And then post this, the issue opens for 3 to 10 working days, which is extendable by 3 days if the price band is revised. It requires 90% subscription, or a full refund is to be given to all subscribers. Basis for allotment it must be in demat form through ASBA or UPI unblocking, ASBA is the escrow account mechanism. And then listing is done, and yeah, and you have the company that is after this entire process that gets listed.
Is your DHP publicly available?
No, no.
Investor roadshow happen post DRHP or post your DHP filing?
So there are stages to it, I would like to add. So there are stages, like one is the finance stage where they are more concerned about the restatement of financial statements that goes into the DRHP or the UDRHP, as the SEBI may advise to include stub period from disclosure perspective. Then there is a management and investor relations side to the offer, who after the filing of DRHP engage with BRLMs and the institutional investors, and they do conduct their road shows right up to, so that is, it is called a marketing phase of the issue. So how you connect closed doors and conduct those road shows, you decide the venues along with the BRLMs, who are the suitable institutional investors who would like to have in your participate in your IPO. And then there is a secretarial legal side who works closely along with the legal counsels to ensure that these legal compliances and disclosure requirements are made through. So the road shows start after DRHP when the marketing phase of the issue opens, right up to before opening of the before the anchor book.
What is the difference between the roadshow and the advertisement of an IPO?
Pardon, sir?
What is the difference between the roadshow and advertisement?
So roadshow is meeting with the investors, giving them information, the know about the business, the financial model, and how giving them insights about the company, how it operates, building a it's a confidence building exercise whereby the investors is convinced to make an investment during your IPO. Advertisement of an IPO are the statutory advertisement that you make along with your branding exercises that you may come up right before the IPO. The marketing phase has a statutory angle as well, which kicks in just few days before the IPO is open for the public. But in a larger sense, the road shows and confidence and brand building exercises start much earlier.
Any non-compliant that is committed by the issuer after filing RHP shall affect the IPO. Any disclosure with respect to the same needs to be done by the issuer.
So any such non-compliances has to be curated before the filing of prospectus, and an addendum to that effect by a public advertisement has to be made, and its filing has to be done to the stock exchange and SEBI.
Somebody is actually sharing. It's not a question. Roadshow is targeted the meeting. Road code is a targeted meeting. Advertisement for the general public, announcement in the newspaper. Roadshow is optional. Advertisement is actually compulsory.
Right.
Yeah. That in fact, before Kinjal comes, let me also say a few things that whatever is there for the preparation of IPO in the legal part is concerned, that is fine. But what happens once your shares got listed, it is as if you are in the race and you have to start running. Nobody will give you any kind of practice sessions after that. So whatever the practice sessions you have to participate in the race should be beforehand only. So though they said that 1 year before the issue you have to start preparing it, but sometimes it may take even more than 1 year also. It depends upon the size of the company. So as I was mentioning that you have to have a complete dry run at least 1.5 year before, like what's called you have to ensure your composition of the board is as per regulation 17. Similarly, constitution of committees, formulation of policies, governance norms, governance structure, compliance culture across the organization. All these things are very, very important, because once the shares got listed, if you have to disseminate the information, several times it happened that promoter may not like it. He may not even understand the consequences of non-dissemination of the information. I've seen several companies and company secretaries struggling that the promoter says something and the company secretary's responsibility is there. In fact, recently one company secretary approached me that the promoter says don't disseminate the information, and the company secretary knows as per regulation 30 he is under an obligation, and as a compliance officer he is personally responsible for that. He was asking what to do. I said these kind of questions you would have asked before because handling the public issue. What company secretaries, in fact, with all due regards, is once that IPO is there, mostly that the moment you appoint your merchant bankers and all, they want to finish the assignment as early as possible so that they will get their assignment completed. But post everything is the responsibility of the company secretary. So according to me, he has to take extra pains to convince the management, conduct proper training sessions for the promoters, conduct proper training sessions for the independent directors, conduct proper training sessions for the senior management. Because nowadays, even the senior managerial personnel are also responsible for certain things under the LODR. So, who are the people who are the senior managerial personnel? What are their responsibilities, accountabilities? All they, unless until you explain to them, they will not be able to appreciate it. So this role of the company secretary is very important before, going to the IP1.
Nagul, you can share your practical experience since you handled about 3 IPOs
Yeah.
in the recent past.
So I concur with the views of Sudhakar sir, but more importantly, what I would say, when companies or promoters are making their mind to come up with an IPO and raise funds, they, in spite of having the BRLMs and all those, they should try and have someone as a transition professional who can guide them throughout the journey. So before making up their mind, one should have that consultant in place, or the in-house company secretary can play that role to educate the board and the management that the IPO is a one-time event in a lifetime of a company, but thereafter it opens a Pandora of compliance, continuous compliance till perpetuity until the delisting happens if the management decides to. So that education, that knowledge building is very much necessary before even deciding on going into the IPO. That's what I would say.
Yeah. Yeah, Kinjal, go ahead. Everyone is concerned with the timing of webinar now. Yeah.
Now the fundamental question is also who should give the training to the senior management and directors while type of the consultants. As
So
Nagul puts it is better
it
the
is on the
company
people
secretary.
skill of the compliance officer that how he can manage the board communication and convinces them that what are the nuances, what are the advantages and disadvantages of going public, and how it would benefit at large. So if the promoters are looking only for minting the monies out of IPO, that would put them in a difficult position post listing. So that awareness becomes very much necessary before you take that decision actually.
I will
I
say
also add
actually,
here. I also add here one thing that though we may say that the company secretary is the friend, philosopher, and guide of the board, but sometimes it so happens that he may not be able to do that, especially in front of the promoters. So wherever the such difficulties are there, he can always take the help of the professionals, professional firms who can convince the board. And the second thing, what happens is that I have observed that though the company secretary or in-house company secretary I'm talking about might be having the thorough knowledge, but sometimes they may not be able to articulate the way they are supposed to, communicate to the board. Sometimes it may not happen. So wherever that kind of issues are there, the company secretary should not be shy of hiring the professionals for conducting these kind of trainings and other things.
Sudhakar, I 100% agree
One
with
more
you.
thing, sir, I would add into this that many a times we just see the pre-IPO due diligence and the IPO and the listing, the golden moment everybody eyes. But during that IPO process, the company secretaries, the specially secretary team forgets that they have to conduct the secretarial audit of that particular year as well. So one has to be proactive enough to manage all that compliances. So immediately after you list becomes listed, all those compliance requirement kicks in, and the time becomes the bottleneck. Time becomes the bottleneck for you to make comply, and that would pose a risk for non-compliances or inadequate compliances, leading to observation in your secretarial audit or compliance reports. And this would also trigger. Now the corporate law amendment is coming. You have to file a different separate form to the ROC commenting on that observation. So the company secretarial team has to be very vigilant enough, and if they are finding that they are not equipped well enough to deal with this kind of compliance burdens, of course they can always take help from professionals.
Yeah, thank you. I think Mr. Bala will take now, complete the presentation and take the questions at last now. Pinjal, now you finish because we are coming, it's almost 12:40, 45. So you finish presentation and we can have, and we will allow people to raise hand also. Okay? Yeah, Kinjal, go ahead.
Yes. Coming to the confidential DRHP filing that has been relatively recently introduced in November 2022. And it has been enhanced by the March 2025 amendments, where the confidential filing mechanism allows issuer to file the DRHP with SEBI without making it publicly available initially. So the purpose of this is to allow sensitive commercial information to remain confidential during the SEBI review. This is particularly useful for companies in sensitive sectors or those in active M&A discussions with other companies. This confidential filing, it must be publicly announced within 2 working days of actual filing, essentially. So after SEBI issues its preliminary observations, the issuer files the updated DRHP1 or the UDRHP1 publicly. So UDRHP must be publicly announced within 2 working days of filing. But when the company first initially files the DRHP with SEBI, and when the SEBI is actually reviewing it, it remains confidential. Pre-filing also benefits selling shareholders by preserving the 1 year holding period requirement. The clock runs from the date of acquisition. Never mind. We'll just run through that. So there are several new age companies recently, such as Grow, the brokerage company with the parent of Birlanu Capital Services. Then you have Shiprocket, PhysicsWala. All of these companies utilize this particular route through confidential pre-filing route, and they filed all their DRHPs confidentially. This could be because the companies may have sensitive information, including undisclosed business developments, user data metrics, pending regulatory discussions, which will be reviewed by SEBI without exposing it to the competitors during the SEBI review period. Now, this has kind of become a preferred pathway for a lot of technology-driven issuers, which have a lot of information asymmetry concerns. Coming to the several intermediaries that are extremely important to this entire IPO process. The first one, the main one being the BRLM, who essentially is one of the main intermediaries in the entire process, who conducts the entire due diligence and drafts the DRHP, RHP. They also interface with SEBI, stock exchanges, investors, and they manage the entire book building process, price discovery, and allocation of the issue. They also are the ones that coordinate with all the other intermediaries also. So they are the ones who own the execution of the entire IPO process end to end, apart from the company. Then you have the RT or registrar to the issue. They handle the application process and allotment. They finalize the basis of allotment. They manage refunds and crediting of shares through DMAT. They also maintain investor records. So they essentially do the back-end execution, investor servicing, etc. Then you have the syndicate members. Now, syndicate members are intermediaries, brokers who collect bids from investors. They upload these bids onto the electronic book building system and support the distribution and investor outreach during the entire book building process that goes on. Then you have the self-certified syndicate banks. Now, these are the banks who accept ASBA applications from investors. They block funds in investor accounts, and they ensure that they are debited only upon allotment of shares. They control the money flow in the IPO process that takes place via ASBA. Then you have escrow bankers. They handle the issuer side funds post allotment. So they essentially facilitate the transfer of funds from the self-certified syndicate banks to issuer, and maintain escrow accounts through this transfer. So they essentially do the settlement and fund movement after the allocation of shares. Then you have the legal counsel, again, one of the many important intermediaries. They conduct the legal due diligence of the company. They draft and vet the offer documents and agreements. They ensure regulatory compliance and risk disclosures. And many a times, wherever required, legal opinions are also issued. Then you have the statutory auditor or reporting accountant. They prepare and certify the restated financials. They provide comfort letters to BRLMs. They also validate financial disclosures in the offer document, and they also look. They also certify the utilization of proceeds post the IPO, and they must be a peer-reviewed firm as per ICAI peer review norms. Then you have the monitoring agency, which tracks the utilization of IPO proceeds. It is mandatory in certain cases. Submit periodical reports to stock exchanges and ensure that the funds are used as disclosed in the offer document. And then you have the underwriter, who essentially provides underwriting commitment, where 100% underwriting is mandatory in the QIB route, in this IPO process, essentially. Coming to the due diligence, which is one of the major activities through this entire IPO process, and BRLM's core obligation, they issue certificates in Form A to F, as prescribed under the ICDR. And these are one of the most significant documents that the BRLM issues. They certify that the DRHP has been prepared after exercising due diligence. All disclosures are made in DRHP are true, correct, and adequate to enable investors to make well-informed decisions. And they are independently verified by the BRLMs. Now,
I
these
think
are followed.
Bala sir was trying to say something, but he was on mute.
No. I am saying we are closer to 12:50. I'm just reminding her. Yeah. Yes, Kinjal.
Then you have, so these certifications are given in Form A to F. So Form A is the initial due diligence certificate at the DRHP stage. And it is submitted along with DRHP, and it certifies that the BRLM has conducted independent due diligence. And the DRHP contains true, fair, and adequate disclosures, and all material facts have been disclosed to enable investors to make informed decisions. This is the first regulatory assurance that is given to the regulators. Then you have Form B, which is due diligence certificate at the RHP or prospectus stage. And all SEBI observations, this certifies that all SEBI observations have been complied with, and the disclosures in the final prospectus are updated and accurate, and there is no material information which has been omitted. So essentially saying that they've incorporated everything SEBI has asked for. Coming to Form C, it is certificate at the opening of the issue. It's issued just before IPO opens, and it certifies that all intermediaries are registered and compliant. Underwriting arrangements are in place. Systems such as ASBA bidding, etc., are ready, and issue is compliant with ICDR requirements. This confirms the operational readiness of the IPO, essentially. Then you have the Form D, which is a certificate at the closure of issue, and it is submitted immediately after the issue closure. It certifies that the issue has been conducted in fair and proper manner, and bidding process complied with the regulations, and no irregularities in bidding has handling has taken place, and the book building process was clean and compliant with the ICDR regulations. Coming to Form E, which is the post-issue due diligence certificate, and it is submitted at the time of finalizing basis of allotment or post-issue. It certifies that all post-issue activities such as allotment, refunds, etc., are in line with regulations, and investor grievances, if any, are addressed. And it also provides the basis of allotment, which is done in fair and transparent manner. So it essentially certifies the execution integrity after the issue closes. Coming to Form F, which is final post-issue certificate, this is the last certificate that the BRLM issues on the completion stage. It is issued after listing and completion of issue. It certifies that all formalities relating to the issue are fully completed and listing and trading approvals have been obtained. All regulatory requirements have been complied with end to end. And this is essentially a closing sign off by the BRLM.
Somebody put up a question here. Check form numbers with their stage of submission. Example, Form B is for debenture. I don't think so. You're talking about the schedule. I think it is the Form B. It is a disclosure for IPO issue, equity issue. I don't know where from this debenture comes actually.
More importantly, these obligations are of the BRLMs and they will ensure filing it with the SEBI.
Or these certificates are publicly available or filed with the prospectus at any stage?
So the one thing, these certificates are not publicly available. The BRLM ensure that they comply and report to the SEBI as per the timeline and schedule provided herein.
Is DD certificate needed at the time of the issue of opening? Issue opening.
If we could just take those the questions towards the end.
Yeah, okay.
Because I suggested this, Mr. Bala, because we are reaching.
No, I thought we are on the same slide. That is why I just.
I think it's going to end only. How many slides, Kinjal? Roughly?
Yeah, we're towards the end, but I still have things to complete.
Yeah. Please go ahead.
So essentially, these certifications create accountability for the BRLMs, and SEBI holds these BRLMs highly liable for inadequate due diligence. For example, in the matter of Karvi Stock Broking Limited, acting as BRLM, SEBI took action for failure to detect and disclose material information. Even in the DLF case, it implicated the lead managers, where due diligence, was as per SEBI was not conducted properly. So these certifications are extremely important in this entire IPO process. Coming to the offer document, its structure and disclosure, the biggest, most important document of the IPO process. It contains of all these 12 different aspects, be it cover page with the minimum information about the issue. Then you have introduction and the offer, which gives a summary of the business issue that they are coming up with, object, means of finance. Then you have objects of the offer, which is specific and deployment of fresh issue proceeds, if there are any, and year-wise scheduled bank sanction letters, general corporate purpose expenditure, etc. Then you have industry and business description, which gets into market size, growth drivers, competitive landscape, detailed business operations, products, customers, etc. Coming to outstanding litigation, all material litigation against issuers, promoters, group companies, directors, like I mentioned, materiality as per board policy. Risk factors. Sorry, I went into in another flow. But anyway, risk factors. This is again one of the most important part of the prospectus of a document, where internal external risks are must be specific and not generic. Um, where the most significant risks must be highlighted first, and quantified wherever possible. And they, like I mentioned, cannot be vague. They have to be extremely specific, be it regulatory risk, be it financial risk, be it industry risks, etc. Then capital structure and general info, pre-post issue, shareholding patterns, capital build-up, etc. Promoter details are all disclosed over here. Then basis for offer price, qualitative, quantitative factors, EPS, PE, NAV, how that has been come up with. Financial statements are also provided, and management and governance factors are also incorporated, which includes directors' profiles, KMP, compensation, RPTs, absolute responsibility declaration signed by all directors, etc. So this essentially forms the most important document of this entire process. Now, we have three different phases of this particular offer document. You have DRHP, UDRHP1, RHP. We'll just quickly go through the difference and how they come about. So once the draft red heading prospectus is first initially filed with SEBI and stock exchanges, and does not contain price band information or issue size. It is and this is where the first time the company applies for the IPO, and SEBI conducts detailed review of this particular document, and provides its observations, which is typically in form of risk factors, related party transaction, business model sustainability, litigation disclosures, KPIs, objects of the issue, etc. Then exchanges and intermediaries also review this particular document. Then the company essentially responds. Responses are prepared for all these queries and clarifications, and changes may be made accordingly. And then the outcome is the UDRHP. Then the UDRHP company files the updated DRHP or UDRHP, incorporating SEBI observations, updated financials if required, because this process takes time. If a lot of time is taken, then then you need updated financials up to the latest period also, and you have the refined disclosures. Once UDRHP is filed and SEBI observations are compiled, you would take final approval. SEBI issues final observation letter, which is valid for 1 year, within which the company files the RHP and goes for issuance for the IPO. Stock exchanges grant its in principle listing approval, and all regulatory conditions requirements are ticked off at this point. Pre-marketing investor education roadshows begin. In institutional investor engagements, analysts, fund assess valuation narratives, because now this is become public knowledge. Then you have the book building preparation that happens. Price band is decided. Anchor investor strategies, finance syndicate members, banks prepare bid collection system. And then you have the RHP, red herring prospectus, which is filed with ROC, which includes the price band, but not the final price. Issue size, which may be flexible, and updated risk factors and financials, cutoff date aligned with the cutoff date essentially. So this is essentially the journey of the most important document in this particular process. Coming to the responsibility of the directors and the company, it is most critical that the prospectus must carry a declaration signed by all directors of the issuer that we, the directors of the company, are duly authorized to issue this prospectus. And every statement made in this prospectus is to the best of our knowledge and belief true and correct, and no material facts have been omitted. Although they can also put a cautionary statement saying that that the issuer, directors, and promoters and other selling shareholders, their liability is limited to only the issuer, directors, promoters, and other selling shareholders, and BRLMs accept no responsibility for any statement made otherwise than in prospectus or any other advertisement or any other material issued by or in the instance of the issuer, and anyone placing reliance on any other source of information would be doing so at their own risk. So they are not responsible. They are only responsible for these particular disclosures made by the company and nothing else. So because of this, SEBI puts heavy accountability on the management, directors, and BRLMs of the company. So there is civil liability under Section 35 of Companies Act, where if there are any untrue statements, any omissions, etc., then there is liability, on every person individually. Then there is criminal liability also involved under Section 36 in case of any fraudulently misstated, misleading omissions or disclosures in the offer document, where imprisonment is up to 10 years with or without fine. And then you have Section 12 of SEBI Act also, that goes heavily on misstatements and omissions on the misstatement or omissions in the offer document. This is fine. We discussed the Paytm IPO. The last part which we will be covering is the promoter contribution and lock-in requirements. So one of the most fundamental conditions of an IPO is the minimum promoter contribution requirement, which ensures that promoters have skin in the game post-listing. To ensure that to balance out interests in this entire IPO process. So the promoters of the issuer shall contribute in the initial public offer for at least 20% post-issue capital. Shares are issued at the face value and nothing below that. In case of ESOP shares, they are vested and exercised before filing of DRHP. Pledge shares are eligible for this MPC, minimal promoter contribution computation. And in case shares are allotted to the promoters at prices below the issue price are only allowable unless the price differential is bought in by the promoters. And shares that are issued from revaluation assets and capitalization of intangible assets are not permitted. And these shares must be acquired before one preceding year from the IPO. There are lock-in requirements for the different investor categories. So, for example, for promoter, for their minimum promoter contribution of 20% post-issue capital, 18 months is the lock-in period. Anything above this is 6 months. Then for non-promoter pre-IPO shareholders, which are apart from the promoters, the lock-in requirement is 6 months. For any AIF, VC, any kind of funds, 1 year minimum from the date of purchase for during pre-IPO placements. Then you have anchor investors. 50% of shares allotted to such anchor investors are locked in for 90 days, and the rest 50% is locked in for 30 days. ESOP, ESPS, SARS, etc. are as per SBEB regulations, and lock-in is exempt for them if they are issued from IPO 6 months requirement. And retail investors, they don't really have any kind of lock-in. We will quickly just run through. I don't know if we have time. Do we have time for key amendments?
I think better we can skip. What to do, Mr. Bala? So many
Yeah,
questions.
it is already 1-5 actually. There are some more questions which are also pending, I think so.
Okay, then we can take up questions.
Yeah. Question is actually we left here whether DD certificate to be submitted with the prospects also. There is no other platform you get to discuss such issue. Okay, it's all right. This is appreciation message. Just to add, the due diligence certificate addressed by the SEBI in BRLM instead of the document under DRHP. At the end, it is to be filed with ROC along with RHP. Therefore, it is a public document. Somebody is sharing the idea. Should a company wanting to go for IPO appoint CS firm first or BRLM first or guide with the company for an IPO process?
Ideally, someone who is very hands-on in guiding this transition, a good company secretarial firm having exposure of guiding transition of IPOs would be a good starting point, rather than roping in the BRLM at the first phase.
The outstanding litigation are now disclosed in the abridged prospects
Can
of
I
the
add? Can
new
I add?
amendment. Yeah,
Mr. Bala?
yeah.
But when you appoint the CS firm, your compliance and your capital, it's a very crucial thing because the company is old or company is in a private form. At that juncture, the promoters may not have idea of going in IPO, and then your compliance level, your understanding, your documentation, you should have stock of that. That guidance CS firm can give, and then you can go ahead with the fruitful thinking how it will go ahead. They can guide you how the process will carry on. So it is advisable. Yeah, please. Sorry.
The outstanding litigation are now disclosed in the abridged prospects of as per the new amendment. Can a brief on the change be addressed along with the implications, if any? I think this is not the topic what we are discussing. Discussion in the abridged balance sheets and prospectus. Okay. Not compulsory to put the price band in the RHP filed with the ROC.
So in the RHP, you have to disclose the price band. The final number of amount or number of shares, depending on the type of offer, like fresh issue or the offer for sale, price band is required to be issued in RHP. But in the prospectus, the full disclosure comes into play.
What
because
is the
your
difference?
issue is closed by that time.
What is the difference between the RHP and the final prospectus?
The only difference is the final number of shares and the amount. And the execution of underwriting agreement as a part of MCMD if this issue is undersubscribed.
Can you please explain what are the responsibilities of the CFO? Any personal liability of the CFO in IPO process?
So I would very humbly point out Section 34 of the Companies Act, which states that every person who authorizes the issue is liable under Section 447. So that sums up CFO being a KMP is under an obligation to give standard certificates that he is complying with the regulation. But to my mind and my limited understanding, he is not the one who authorizes the issue. The authority for issue rests with the board and the shareholders of the company. So of course, the preliminary check as an officer of the company lies with all the KMPs, not just the CFO, but the board overall is responsible for the issue.
Jason, you want to add something? I hope he's there. Okay. Okay, Mr. Bala.
Is an offer document and okay, fine. This question we have answered. Sudhakar has already said I am excusing myself some time back. Regulation 237 is for SME. That's what he is saying. Somebody has put up a question, SAR shares. I don't know what he is asking really. SAR shares, SAR. Main board is regulation 14 to 17 for MPSC lock-in. A major object of the capital lock-in 36 months or 12 months. Somebody is asking if the major object is capex, whether lock-in is 36 months or 12 months.
The MPC is 18 months as per regulation.
Very information, though it is the room for the audio improvement, especially we heard in Stringent that the overlap actually accident, which is presentation, the formula were good. Thanks. Okay, it's a appreciation message which is coming. Any example where IPO was successful because of the underwriting by merchant banker?
So kicking in underwriter obligation, it means the IPO was short of being successful, and there is historically one event, one instance of underwritten issues in the last more than 20-25 years.
US passport holders having a NRO account, can they participate in the IPO? Nil allocation happened through the pro rata or lucky draw?
See, the allocation entirely rests with the stock exchange and the RTA. It's a system process where there is no human involvement, or there is no discretion as such. So it completely depends on the demand and the application.
How can group of this HNIs invest in the anchor book?
If they fulfill the criteria of minimum 10 crores bid in the anchor book, then through BRLMs, of course, they can participate in anchor book.
Most of the people have been asking for the PPT. I already said also in the past forum, also in the beginning also I said actually PPT as such is not shared, but the recorded webinar will be available. It will be disseminated through the YouTube. You can actually view from the YouTube, which contains the PPT actually. Whether the prospector also be put on the NSE BSE stock exchange website similar to DRHP or RHP?
Yes, it is available. Though it is filed with the stock exchange, you can find that information in the stock exchange website as well as on the company's website as well.
Or investor section of the company prospectus to be published. Yeah, you can do that.
Yeah. So the prior condition I would like to highlight, though all these questions come in when the second session of this series would start, where you would actually feel what compliances have to be done. So before we go for the final listing approval, we have to give a corporate governance certificate whereby all these compliance of all these conditions, including a regulation 46 and 47, we have to state that all these documents, and we have to provide the link where it is uploaded. So we have to create a separate section on the website. So these are lot practical activities, and of course that would be covered in the second session of this series.
Whether US based individual apply on IPO, you can apply, but only thing is subject to that RBI, whatever it is, repatriation, not repatriation, etc., that you will have to fulfill. Short stock appreciation right, if the without the buying the share, it works as a call option. I think.
Yeah, but that was not relevant here, and
that is not relevant here.
We know stock appreciation right, like I saw. Yeah.
That is all the questions I think I have done with all the questions here.
Yeah, there is a suggestion from I don't know who, that some factual correction was required in presentations to be kept in mind in future.
What would be the role and function of the compliance officer? Is it laid down the ICDR regulation 2008? Is only CS eligible to be appointed as the compliance officer? CS is the compliance officer as per LODR regulations, because compliance officer is necessarily to be a qualified company secretary. That is the requirement under the listing regulation very clearly. Or can a CFO be the compliance officer? CFO cannot be a compliance officer. It is only a CS who is a compliance officer.
A CFO can be a compliance officer if he is a qualified company secretary and member of the ICSI.
Correct. Again, it comes to qualified CS only. It comes to, that's it.
So we can find many such instances where the company secretary is discharging the role of CFO as well. Because for CFO, there is no particular qualification. The only qualification that he should be able to appreciate and understand the financial statements.
Correct. Okay, let me see. Any hand is risen actually. Yes, I can see there is a hand is risen. There are two people. One is actually a Jyoti. Other is actually a Anat. Both of you can unmute. You can talk, please. Jyoti.
I don't know. I think Miss Jyoti raised hand quite in middle. I don't know, by mistake or something.
There is one Agarwal. Initially, he wanted to talk. Whether he is there, I don't know. We told him that we can actually talk. Now I can see another hand is risen actually. Ravi Shankar. Yeah, You can unmute and talk. I don't know. These are only hand is written.
They all are allowed. I don't know. I was checking that only, but I think it was by mistake. Mr. Ravi Shankar hand is now not raised. So I think it is by mistake.
Okay. Then I can only see Jyoti's hand is risen.
She was in between only when the webinar was going on. I think that is also by mistake.
Okay. Then I think probably we can call it a day. We can close the session. Before closing the session, I would like to once again give my appreciation to Kinjal, nicely, tabulating the contents and putting the appropriate thing and presenting very elucidately. That I would like to definitely give appreciation to our panelists. Yes, 100% is vast experience of handling the multiple issues wherever he shared his knowledge, personal experts. Very good, really. It is really adding value. In fact, I start learning most of the things now since I'm not actively in the employment or other things and all the things. More and more things I'm coming to know. It is, always said the wise man learns from others' experience. That is what the experience I am actually gaining it. Thanks a lot, Mr. Nakul.
Thank you, everyone. Thanks for your time.
Thank you. Thank you.
Thank
There is
Mr.
one more question. He is asking, will we be continuing with this topic next week? As Dipti ma'am has stated at the very beginning of this session, that the entire April and May month would be the IPO series, if I'm not wrong, ma'am.
Yeah, that is right. We will be conducting almost about 6 sessions continuously on this series. That is the thing. It is a part. It is a part 1. Yeah.
On ICDR, yes.
Yeah, I have mentioned the dates also. SME IP also we are taking. So as I mentioned also that continuously there will be sessions. So keep updated yourself. You will get the information. Till entire May, Kinjal?
Yeah.
Entire May is there. Okay?
Yeah.
Thanks everyone. Thanks for your time. Thank you. Thank you, Jayesh Bhai. Thanks a lot for your intervention.
Thank you. My pleasure, always.
Friends, Jayesh Bhai is himself is a BRLM and he has taken the time and attended and helped us to solve many issues also. Thanks a lot, Jayesh Bhai. Thanks everyone. See you next week.
I only like to say a last word. We had an excellent participation of about 336. Even at the close of the hours, we are now looking at 167 or so. That itself shows the importance of the topic. A. B. The urge of learning, which is actually coming from our professional. That shows very clearly. I am really, deeply impressed on this. I am deeply delighted actually to know this. Thank you.
Thank you.
Next session would be more interesting now.
Yeah.
Yes, sir.
Yeah.
Thank
now
you very
it will
much.
be IPO, real IPO.
Yeah. Yes.
Today
Meet you all in the next week. Have a good weekend. Thank you.
Yeah, Mr. Nakul, you are telling something.
So I was just extending my words of gratitude that thank you for having me here to share a few things I know a little bit about, and I hope I was able to add value and share my thoughts on this.
100%, sir. 100%.
Thank you.
Thank you. Thank you. Thank you, everyone. Thank you. See you next week.
Thank you.